All right, so looking at our process cost flow, we are going to keep up with our materials, our labor, and also the allocated manufacturing overhead over the period of time that the products are being produced or the service is being provided. So here we've got an example company. Tyler Company manufactures rollerblade and skateboard wheels that it then sells on to manufacturers and retail outlets. Their manufacturing of these wheels consists of two distinct processes. They have the machining process, where they grind down the metals and the plastics, etc., and then they have the assembly, where they take those different components and put them together to make the wheel that they then sell off. The machining department shapes, hones, and drills the raw materials. Therefore, they're going to get an allocated amount for manufacturing overhead and their distinct materials that they use in that particular product, and the labor hours and the rates for the workers. And then once they have sent that on to the assembly department, which is another work in process department, then the assembly people, we're going to have their labor, and we're going to have the packaging cost, the materials cost for the packaging of the parts, as well as their allocated amount of the manufacturing overhead. So we can see that when we track the raw materials, they are going to have so much raw materials that goes into the machining department and so much raw materials that goes into the assembly department. And then we have factory labor that will be distinct to the machining department, and so much of the factory labor cost will be distinct to the assembly department. And then the manufacturing overhead, so much of it will get allocated into the machining department, and so much will get allocated in to the assembly department, just like what we saw in job costing. Now, when the wheels have been shaped, honed, and drilled, the actual parts of the wheel, once they're finished in that aspect in the machining department, they are considered 100% converted or completed as to the machining of them. And when they're 100% completed or 100% converted into those pieces, that is when we transfer them out and into the work in process of the assembly department, where they will be further taken and converted more by assembly. Okay, so once we move them into work in process in the assembly department, we will then use some more materials, use some more labor. Of course, we've got overhead that we're incurring in that department. We'll utilize all that and then finish them. Finish converting them 100% of the way as to assembly. And then and only then are they wheels that are ready to be sold to our end users, our customers. And that's when we would transfer them out of this final WIP category into finished goods inventory. And everybody knows all of these costs are inventoriable costs because these items would in fact be sitting on our balance sheet as WIP until they're 100% complete, finished goods, and then we would have them on our balance sheet as finished goods inventory until they're finally sold. And then those inventoriable costs finally get recognized as expenses. cost of goods sold once that item that they are attached to sells. All right, so finished goods inventory, once we sell it, it becomes cost of goods sold. We debit that cost of goods sold account and, of course, credit it out of finished goods inventory. All right, so we're still following the same flow, but notice that we have more than one WIP account. In this particular example, we've just got two, a machining department and an assembly department. But we could definitely have more than one, more than two, more than three, depending on how many processes our item or service has to go through. So, following the same type of journal entries that we used in job costing, we are going to debit raw materials inventory anytime we purchase raw materials. And we know that those raw materials are going to sit in raw materials until they are requisitioned out. Now with process costing, we typically don't have as many requisition slips during the period as we would if it was job costing. We're looking to make 1 million big pens this month. We are going to know exactly how much we're going to utilize during the time frame, and we're going to maybe divide up what we need into weekly amounts and requisition only 4 times for the amounts of materials that we need. All right, so when we purchase raw materials, we're going to debit that raw materials account and likely credit accounts payable or credit cash if we didn't buy on an account. And then as we utilize raw materials and requisition them into those distinct departments, we are going to debit the work in process account for the departments that got the materials. Okay, so we're going to debit specific WIP category 1 and specific category 2 and credit it out of raw materials whenever we utilize it. Factory labor, how we've captured those costs in that factory labor account, and that was for the direct labor, the folks actually working on the items or the service that's being provided. As we track their time, we're going to be debiting it in to each individual WIP department. Okay, so much of the factory labor went to machining, and so much of the factory labor went to assembly. Then we would debit those 2 accounts and then credit it out of the factory labor account. And then our manufacturing overhead, just like we learned in our prior chapters, we are going to estimate the manufacturing overhead in advance of the year or the period, and we are going to divide that by a particular quantity of units of our item that we're going to use to allocate it. So direct labor hours or machine hours or factory labor cost. Well, in process costing, many times manufacturers are heavily utilizing automation. They're using robots, they've got assembly lines, and those kinds of things cost a lot of money as far as overhead goes. But at the same time, we can use the machine hours as our denominator in that calculation because it is more cause and effect relationship for how and why that manufacturing overhead is accumulating and how it is being utilized. All right, so we would take the estimated manufacturing overhead for the period and we would divide it by the estimated number of machine hours for the period, and we would then have that predetermined overhead rate, and then as those hours are utilized, then we would allocate into manufacturing overhead the cost from manufacturing overhead into the WIP. So WIP Department 1, machining, gets so much of manufacturing overhead, and WIP Department 2, based on their machine hours, is going to get so much of manufacturing overhead. You guys should go back and review that information as was seen in our 2 prior chapters. Some of you may not have captured that so well, and it most likely showed up in your performance on your test. So do go back and take a look at how to calculate the predetermined manufacturing overhead rate. All right, so these cost elements are all going to be assigned into the work in process in our process costing system. So here is what I was describing with the material cost. As we put materials into the specific departments for their use there, we would have requisitions, but again, it's most likely for larger quantities. And the journal entries look a lot like they did for job costing, but notice that under our example that we're utilizing for Taylor, they have 2 distinct departments, and each one of those gets so much of raw materials that they needed. So notice we have 2 distinct work in process accounts that are getting raw materials debited into them, and only 1 total is coming out of raw materials to reflect what was taken out and used. Here's the factory labor. Again, we're still going to be using time tickets. We're going to be tracking that direct labor in these distinctive work in process departments. And then we will journalize those dollar amounts out of that factory labor account, which captured all factory labor. In essence, we're divvying it up into the distinctive WIP departments. So much goes to the machining department, so much goes to the assembly department based on the time and the rates of those workers. And then again, with our manufacturing overhead, go back and look at how we calculate the predetermined overhead rate. And we have an objective here of assigning the overhead into these accounts in order to allocate the overhead to the production departments on an objective and equitable basis. These manufacturing overhead costs are for all kinds of things. And when we allocate this manufacturing overhead into these distinctive areas, these managers of these areas are going to be evaluated, and their performance is going to be monitored. And this manufacturing overhead affects how good they look, right? So we need to consider using activity drivers or the causes of the cost. And like I mentioned many times, in a process costing environment, it is very heavily automated, and therefore we most likely need to use machine time or machine hours because of the fact that so many machine hours are used in the process costing environment. When you jump into the next chapter after this one, we're going to see a little bit more about how this manufacturing overhead allocation makes a massive difference in reviewing our cost of providing our products or even our services, if you will. It's a very important component. So here with our manufacturing overhead, based on our predetermined overhead rate and the number of hours machines have been used in WIP machining and in WIP assembly, they are going to get so much allocated into them. So debit WIP machining, debit WIP assembly, and then the total of that gets credited out of the manufacturing overhead account. Now, here's another thing that some of you still need to go back and look at again in chapter 15 towards the end, where we talked about what happens if at the end of the period the manufacturing overhead account still has a debit balance. Then it's underallocated. What do? What if when we get to the end of the period the manufacturing overhead account has a credit balance in it? What do? It's overallocated. What do? Go back and review that if you don't recall how all that works. Again, some of you may not have grasped it good enough, and it showed in your performance on the last test. We can do monthly entries to transfer goods to the next department. So I'm going to show you how to put together the cost report. And the cost report is going to be done for each one of these work in process departments. So in our Taylor example, at the end of the month, we are going to figure out how many units did we completely machine 100% of the way and then transfer them out and on to the assembly department. And we're going to use that cost number to make this journal entry right here, because we're moving it out of the WIP machining account and moving it into the WIP assembly account to show that it's been moved over to the next department, and now it's their turn to do their thing, which is assembly. All right, so based on the dollar amount we calculate, we're going to debit it into the WIP assembly account and credit it out of the WIP machining account. Whenever we're looking at the assembly cost report at the end of the same period, we're going to figure out how many and for how much did we 100% of the way assemble them, and now they're finished wheels. When we do that, we're going to move them on out into the warehouse or wherever it is we're going to store these finished wheels until the customer orders them, and then we'll ship them to them. All right, so when we do this, we need to debit them into the finished goods inventory and credit them out of the work in process or WIP assembly account, because they are no longer work in process. They've actually been completed, and now they are finished goods inventory. And then lastly, whenever we do finally sell those things and we ship them out, or the customer comes and picks them up, whenever that legal title passes, you guys know that we get to recognize the sales revenues with a credit, and we're going to most likely debit accounts receivable if they're going to buy them on account, or if they pay us cash immediately, we would debit cash. And then we've got to recognize the cost of goods sold aspect of that transaction. So however many units they bought at their cost per unit is going to give us cost of goods sold. So debit cost of goods sold, that expense account, and then credit finished goods inventory to take it out of our finished goods inventory. All right, so the transactions are quite a bit the same as job costing. The only difference here is that we're having to move it at least one time in Taylor's example from the WIP machining to the WIP assembly. Okay? But for the rest of it, taking it out of work in process to finished goods and finished goods to cost of goods sold is the same as job costing. I am going to pick back up here in a moment in regards to this equivalent units concept. And this is where it gets a little more complicated. So let's pick back up with video number 3, and we will start talking about equivalent units.